In money matters, the JSE is seemingly lifting on optimism about U.S. rate hikes ending soon. Investors are awaiting key inflation data as they assess the future direction of monetary policy. Greg Katzenellenbogen is the director at Sanlam Private Wealth, and he joins us now to dissect the latest market moves. Greg, thank you very much for your time this afternoon. The rand strengthened in early trade. Talk us through what is driving trade and whether or not stage 4 load shedding will have any bearing on this newfound strength.
The rand really strengthening because of commodity prices are higher and the dollar is weaker. I think you can ascribe much of the rand's movement since it started falling out of bed to weaker commodity prices, because that's important to the country. The fact that also aggravated by load shedding and the fact that you can't get that you have rail problems getting your goods to be exported also contributes to that. But recently the rand sort of diverged from some of the other so-called commodity currencies like the Australian dollar, the Mexican peso, which have actually strengthened against the US dollar. But today the rand is strengthening primarily because you would have read about China facing deflation, and it's widely expected now that the Chinese government will bring in some sort of stimulus or measures to try and get that economy on a surer footing. And the rand is probably just discounting that news.
Okay. Stats SA is due to publish the latest manufacturing, production and sales data. What's your forecast for the sector, and what clues does the data give us about the health of the sector?
Well, look, I don't have any forecast. I'm not sure. All I can tell you, when the last month's data that came out for April showed the first increase in about 6 months. So that meant that a lot of companies were slowly reducing their reliance on Eskom by starting to generate their own power. Now, in between, we've started to see a lot easier forms of load shedding. So extrapolating that, you will probably see that we might have better manufacturing and sales news coming down the line. But until the data is out, it's difficult, because there are a number of effects that could show that things are still tough in the economy.
Fair enough. Chinese regulators have imposed more than $1 billion in fines on tech giants Ant Group and Tencent Holdings. Is this an end to the crackdown on the sector that had wiped out billions in market value?
Well, I would think so. It surely looks like it. If you think that over $1 trillion has been pulled out of China by foreign investors, so much so that the Chinese president has been asking foreign investors to return to the country. So I would imagine that this probably draws a line under the crackdown on tech. Also, this crackdown on tech has led to at least 1 in 5 young people being out of a job because they've been unable to find work in the tech sector after it's been decimated by the Chinese government. So I think it does draw a line under that, and China is desperate for foreign investment.
Sure. Nigeria's naira devaluation seems to be luring foreigners back into the nation's stocks. What's going on there?
Well, the new president or president-elect has allowed the currency to devalue by around 40%. So if history is any guide, any time that you have such a substantial depreciation in your currency, has been excellent for your country's stock market. We've seen that the Nigerian stock market has recovered quite strongly. But if you look at Argentina is the best performing stock market this year. It's up 101% in US dollars, and that's after their currency was allowed to depreciate by 50%. Same thing in Turkey, up 74% in US dollars after their currency also fell significantly. So money pouring into Nigeria, and if Nigeria can continue to implement the reforms that everybody expects this president to do, the IMF is even predicting that by next year the Nigerian economy can grow by at least 4%. So if only that was South Africa with that kind of growth rate, would alleviate many of our problems.
Let's come back home, Greg, and take a look at this, if you will. On the weekend, it's the Sunday Times, if I'm not mistaken, on page 4, also if I'm not mistaken, of the newspaper, they had an article and a picture splashed on the paper of Marcus Euster, who was enjoying a rugby match, and he was also photographed next to the CEO of Taki Town. And news today that his alleged girlfriend approached the courts in order to have the South African Reserve Bank give her a monthly allowance of funds that had been frozen of some 150,000 rand. How does it work that he's a wanted man and he's allegedly out and enjoying rugby? How's he living? And here you finding somebody that wants funds that were frozen to be released in the form of an allowance. What's going on there?
So, look, you know, when your assets are frozen like that, allowance has to be made for your day-to-day living expenses. They can't leave you destitute. But I don't know the implication in terms of his alleged girlfriend. As far as I know, she hasn't been charged with anything. But when your assets are frozen like that, and it's a drawn-out legal process. So she's obviously looking for some funds to fund her monthly lifestyle. Now, it could turn out that eventually her assets are unfrozen if they can't prove that they came from illegal means. But the fact is that in the 150,000 that she's looking for, about 80,000 of that is for the upkeep of her horses, I believe, which are polo ponies. So I don't know, the Reserve Bank might take a dim view of that, but generally they give you money that you can, you know, you can still live, and but whether to fund a lifestyle like that, that is going to be very interesting to see what happens. But just, you know, neither of the parties so far have been charged with anything in this country, and I know Mr. Euster has been charged in Germany, but in this country, if your assets are frozen, you still have to be given some monthly allowance in order to live.
If wishes were horses. Greg, thank you very much for your time this afternoon.